Hey guys, welcome back to another video of JB&D's Market Sniffs. We're sniffing out the market for some golden nuggets. I know it's been a while. I've still been sniffing out the market. However, just haven't been recording. But let's just get the ball rolling again, okay? A new layout. Just changed it a little bit. I might tweak it a little bit more. I don't know. Kind of don't like the background color. Kind of don't like where my socials are at. Too much spacing. I don't know. Anyways, I wanted to start off the reason why I think we haven't dropped significantly in the market yet, despite the volatility index being very elevated, despite everything that's been going on. Guys, it's crazy, right? So, well, the reason being, I think, is cash levels are at lows, right? And typically, what you would see when cash levels are at lows is you'll see a market pullback, okay, to wash out everybody that's invested, okay, in some way, shape, or form. However, cash levels are at lows, but everybody's hedged, okay. Put skew for the S&P 500 was elevated. I don't know how it is right now, but a few weeks ago it was elevated. So yes, cash levels were low, but everybody was hedged to the downside. Everybody was protecting themselves to the downside. So what is the point of cash levels being at lows if everybody's already betting on the downside, right? So what's the way to make the people lose the most money in this scenario? Is you chop it sideways, okay? Cash levels are at lows, so they're hedged to the downside, but they're still invested long, okay? So they're invested long. You're not pumping it because cash levels are at lows. Everybody's invested, and if you pump more, everybody wins, okay? But if you drop it, they still win because they're all hedged. So what do? You just keep it sideways. Just keep it sideways. Chop, 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 chop. Their hedges lose value, and then eventually they sell them out of frustration or for whatever reason, and then they're not. And then they'll be exposed because they'll cover their hedges, and they'll be exposed long, and then you could drop it. Another thing, I don't know how many times, but the market doesn't always, like, when the market crashes, it doesn't crash right away, right at the top. A lot of the times, it tops out for months in advance. Months in advance, it tops out. Maybe it starts to do a very, very slow downtrend or just sideways. And then after a while, then you get very volatile downswings in the market. Okay? So maybe that's what's going on right now. I don't know, but I'm focusing on why we haven't pulled significantly like we did last March, last April from 2025. We're down like a very couple percents, less than 5%, maybe even less than 3%. I really don't know. Okay, look, this is from the market year. The VIX is exploding higher, yet SDEX is actually slightly down on the day. That divergence is notable. If skew isn't rising alongside spot volatility, it suggests panic demand for tail protection isn't accelerating further. Are we seeing the first signs that this latest volatility spike may be nearing a pause? But this was 4 days ago, on the 3rd, Friday, Thursday. Okay, so like on Tuesday. Skew is sitting at extreme levels. More important than the absolute level of the FTX index is its trajectory this year. It has been steadily climbing. If a larger downside move materializes, the setup could turn ugly, as dealers would be forced to dump delta to rebalance risk, amplifying any downside move. So, and then that Tuesday, we did get a pretty good dip. But I don't know if I remember correctly. But then I think at the end of the day, we actually recovered. But yeah, that is one risk. If everybody, we could still dump even if everybody's protected to the downside, and that could make things, I guess, according to this source from the market year, worse. But the likelihood of just burning them instead is bigger, which is what's been going on. Okay. Okay. Cash. Let me see that cash level thing. So yeah, well, cash is low. Okay. So AAI asset allocation. Bonds slightly ticking up, and cash are lowest since November 2021. Okay. Mm-mm-mm. Anyways, I can't find it. Another thing, do you guys remember a few videos ago I talked about how analysts for their 2026 forecast, none of them predicted a recession, like not a single one, and not a single one predicted, what was it? I forgot something else, but like everybody was pretty much bullish, which was crazy. And now look what's happening. Let me see if I can find it. Yeah, I don't have it. Man, I don't know what happened. Anyways, so that's what's going on right now. So we covered the put skew, volatility index, whatever. And I've been bearish on the market on pretty much indices since a while now, right? But I reiterated my stance on this at the beginning of the year or in December, that I think we're getting a recap. I mean, um it's at the tip of my tongue. A repeat of 2025. Okay, um, and pretty much we've kind of been getting it. We've gotten it with the volatility index for sure during this period during March. Um, However, we haven't gotten that downside weakness, just choppy. And I mean, I warned about it since noticed the sectors that were outperforming year to date a month ago were energy, materials, and consumer staples, right? And again, you go through the sector chart; those are top three performing sectors at a market top, typically. And since then, yeah, indices have been sideways. What I am focusing on now is mm, is China, the Chinese tech. Okay, let's see top performing: XLE energy, um, XLP consumer staples, and XLB materials. Okay, boom. Anyways, so the Chinese tech dip is what I'm focused on. Let's do some DD. I might be all over the place. Um, Alibaba has dumped quite a significant amount. Oh no 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 no! I moved my fibs. I moved my fibs. Oh, hold on. Now I need to figure out where this fib came from. Shoot. Oh, okay. Hold on. It won't let me move it. That's so dumb. Look. Okay, okay, okay. Let's just log that. What is going? Look, my computer is tweaking out. The heck? Or whatever. Whatever. Oh, I can't click anything. Okay, this is why I have charted out. So originally I was playing the range break. Pretend like we don't. Okay, I could do a replay. Cool thing about Weeble is you could do a replay. You go here, replay. Let's do bar replay. Let's start from here. I think I went along here. Okay. And this is what the chart looked like originally. I started scaling into some longs here. I was like, okay, this is just range trading. We're at the low end of the range. If it goes down to whatever this level is, 145, so I'll add more, which I did. I thought we'd bounce back into the range. I mean, back to the upper end of the range. But we go lower, 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 lower. And like, damn, okay, it flushed out flag breakout traders. It flushed out range traders. This could be a spring. But for this to be a spring, I would, for me personally, I would need this to recover now. I don't want it to be in this red zone. The longer it stays in this red zone, the likelihood of this becoming a spring goes down dramatically, in my opinion. At least for this setup, okay? Why this? Why do I start it here? 'Cause this is where I have a fib zone, okay? I have 3 different like Fibonacci's, and yeah. So you see this range? I don't want it. I don't want it here. I want this to like be back above. Hopefully, one bullish case back over 140 at least. At 140 end of this next week. But I don't know. We'll see. They have earnings the 19th in 12 days. Okay, that's Alibaba, right? But then why I'm bullish? Well, another reason why I think this is like a make or break level. You play the monthly, turn on the EMAs, turn on the super trend. Okay, so let me hide these other. Let me just hide the Fibonacci's now. Okay, so the 20 EMA is this purple one right here. Okay, the super trend is this. This is the green arrow. So super trend turned green, back in this time, and then green since then. If you play a specific setup that I like to play, so bullish signal. So super trend turns green, okay, and you basically just stay long. Once it turns green and flips over the 20 EMA up until the super trend turns red again, then you short, okay. But a lot of time you'll, if you're not like, a lot of times, me personally, I miss the original breakout above the 20 EMA. So what I do instead is I like to play the retest. This retest right here, I like to play this retest of the 20 EMA, and then hopefully catch another wave up with the green super trend. So that's basically what I'm looking at here. Okay, we're getting that retest, and that's pretty much it. Look, that's simple. Okay, you see, retest it here, boom. It's pretty much what I think I did that back in the summer, and then boom, now we're getting it again. Obviously I was longing since like 150, 152 I think to 145. I added a bunch of March calls, and now I'm down deep red in those. They might go worthless, whatever, I don't care. Slowly, very, very slowly, I'm adding some April, May calls. I think June, I might not have all the June calls, but I have added K-Web calls for June and August. More for June. Somebody's loading these up. I don't know who, but they're loading them up. And yeah, so here are my levels for K-Web. Broke under this. I was looking for this, but I guess you could argue and put it down like this. Right? I'll just keep it where I had it originally. Whatever. And I think we could still, I think it's fine, honestly. I'm not worried about it. It's, come on guys, like, do I really have to like explain the whole China thesis and everything again? I really don't want to. I recommend just going back through my videos, and eventually you'll find it. It might be 2025 recap, or if there's any video that I have that has anything China related in the title or something like that, you'll find it. And this is a lot of reasons to be bullish on China, and I'm just trying to take advantage of a dip. And if it goes down lower, whatever, I'm at a point where I'm not really going to add much more. I'm just going to let it do its thing. If it wants to bounce, let it bounce. If it wants to, because it's at a really critical level where if it breaks here, it's a big structural break, and whatever. I don't want to force it and catch a falling knife that doesn't have a structure anymore. Anyways, PayPal. Let's look at this PayPal chart. What I've been watching for PayPal. Pretty much to me looks like it's a wick off accumulation. Okay, you see this Right here, right here, right here. You see that, right? You see that? Now look at this. Look at this. And I think we're at the spring. I think we're at the spring. Something like, there's one that I really, really like. Maybe like this. Nah, probably like this one. Okay. No. I guess it's more, yeah, like this one. Yeah, this one, okay? You see? Boom, 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 okay? So you got the boom, boom, then you get one more boom over here. Okay, you see that? So this is a spring. That's what I thought. Loaded the boat in the 40s on some in the money leaps, and averaged down. My first buys on PayPal were around the 72 range. Averaged down eventually. I had maybe a $65 range. We had that earnings crash, and I added a bunch more. I'm sitting at a $52 basis. My plan, honestly, once it hits 52, my cost average, I'm going to sell all my shares. I'll only keep the in the money leaps. That way, I free up a lot of cash, and I'm just not gonna sell the leaps. I'll let them ride out. They're like they have like a 2-year expiry, and if if expiry comes and I haven't exercised and I decide I want to, then I'll just exercise them, and that's fine. This way, I have what would be a big position, but with less capital, and the capital that I free up from selling the shares, I could use it in case of an event where I just need to utilize some cash on the dip or something like that. But yeah, like so far it looks like it wants to go for it. I Man, we made a bunch of money on PayPal in on the 23rd and 24th. Um I'm not playing any more short-term PayPal calls cuz it could always dip again and fail this spring. It's just sideways and sideways, and all. I don't want to deal with that with short-term options. I already caught a good move from I think 40 to 46. At this point, I'd be exposing myself to a little bit more risk that I don't need to take, because if it goes up, my in the money at 52, my in the money leaps go 100%. So at that point, I'd be up what I paid for the leaps, and I'd be able to sell off the shares and basically but hold more in a way with less capital than what I would with the shares. And yeah, should we just go over some data now? There's a bunch. I'm not gonna go over the whole month's data that I've been gathering, but we'll do some. Okay, right here, the Nasdaq 100 of emerging markets is back at a key level of interest. Will the buyers step in? Do you see this? That's a really nice chart. I like all-star charts. I just need to see the EMQQ. Okay. EMQQ Holdings. There you go. Oh my god. Okay. Reliance Industries. Their third biggest holding here is Alibaba Group Holdings. Okay. PDD. Okay, they have a bunch of Chinese names. Tencent. I think I'm not sure if this one's a Chinese name. I'm not sure. Meituan. Okay, they have a bunch of Chinese names in their top holdings. And the Nasdaq 100 of emerging markets is at a key support level. This chart looks so good, and if it breaks down, whatever, man, whatever. But I could risk it for the biscuit. That's my opinion only, not financial advice. Speak to a financial advisor before you make any financial decisions based on any of this content, because this is all for educational purposes, okay, and informational. Weekly business formation exploding higher, likely driven by AI. The past 2 months, I've seen record outflows in the Nasdaq, even more outflows than at the 2022 bear market bottom. I wonder what these flows look like for this version of the Nasdaq. I just wonder. I just wonder. Dude, what the hell? Man. Nah, but Alibaba this week really messed me up, bro. It really messed me up because I wasn't expecting that much of a downside. But technically, the setup is still there. I just don't want to risk too much. You know, one thing I haven't touched on is the Japanese yen. Yes, I'm still long on the Japanese yen. I want you to see something. Okay, you might think like this guy's crazy. Why is he still long? The chart, like it looks bearish as hell now. Da 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 da. Just hear me out, okay? I want you to recognize this pattern. Just recognize it for me. You know what? No, let me just. No, yeah, recognize it. Okay, you see this? Okay. Base right here. Pump. Dump. Pump. Dump. Back to the same range, okay? You see? It dumps to this range. It pumps to this range. But those pumps are violent and the dumps are also violent, okay? Now you were thinking, wow, this looks super bearish, right? And originally I was thinking like man, like on a TA basis, like I don't really see the setup anymore on the shorter frames, because on the yearly frame it's still there. It hasn't really broken that level that I'm looking at quite yet. But on this time frame, the daily, it looks like damn, like it looks trash. But then my pattern recognition skills went off, and I said, you know what? This looks awfully similar to Intel. Intel before its run up in, what was it, May or something? Okay, are you seeing this, guys? So can we do a bar replay? Bar replay from here, right here. Okay, do you see this? This is a yen on top and this is Intel at the bottom. So, dude, it's crazy to me. Base here, spike, automatic dump, another spike, okay. Second spike doesn't reach the first spike's high, very close, but it doesn't. I don't know if it matters. Anyways, we get that second dump again. Okay, back at the low end of the range. Okay, low end of the range. Now let's play the bar. So we get another candle, and it's still range trading. Okay, it's still range trading. That's basically where we're at right here, right now. Okay, it's range trading, and it eventually starts going on an uptrend. So I try to just like draw it out. So we just chopping, drawing uptrend. You guys see the vision now? Do you guys see the similarities, dude? And it's crazy because I feel like this is like a really good setup to like really like mess with people that are long on whatever that's the ticker is, because it really does look ugly. It really does look ugly, right? But then it slowly starts to float up. Okay, as long as the fundamentals are there, which in this case for the yen, on my thesis, they still are there. The hell, on Intel back then they were still there. I maybe had like an 18, 19 cost basis, and yeah, just stick with the thesis. Let's see if this works though. It might be an utter failure. But I'm liking my chances. You know what I just remembered? Can this replay go quicker? Like, come on, guys. I want to show you guys when it's like high. What I get there. It's flying here, and what I get there. Okay. Yeah. So hopefully the yen follows the same path. Hopefully quicker though. Hopefully much quicker. Look, boom. And now it's like in the 50s. Boom. The yen's gonna follow the same move. Hopefully, I pray. Hopefully, don't trade on hope. But there's a lot of due diligence behind this trade. Okay. And if you want to know the fundamental thesis behind it, go watch my video. It's literally titled "Yen Carry Trade" or something like that, and you'll find it. But you see where we came from? We came from this, and it looked ugly. Everybody was mad in Intel, but I remember, oh my god, round trip, and then round trip again. Round trip again. Whatever, bro. Whatever. Hopefully we get the same move. And it doesn't end there. It goes higher. It still goes to like 50s. I still need to zoom out more. Do you see the potential here? You add the fundamentals to it. You'll see. Do you see this here? Do you see the potential here? My goodness. Look, just like that. all the way from down here, all the way up there, it's gonna go higher. Oh my god, well, you can probably see it. This is one of my targets. That's one of my targets. All the way up here. But hopefully it works, man. If it doesn't work, whatever, tried it. But I don't know, this is other. Anyways, shall we move on? I just really wanted to show you that because to me it's crazy. I was gonna show that here in my Discord, but then I had to go and do some stuff. Anyways, as of yesterday, S&P 500 has a 3-month negative return. However, more than half large cap stocks are up 5% or more over the last 3 months, and 38% have advanced 10% or more. We'd have to go back to 1999 to 2000 to find a similar setup. Again, I'm not too worried about getting a big underperformance in the indices this year. Because why? Because a lot of the long terms that we're in outperformed indices in 2018. I think in 2018 indices closed red and several of the names closed green. Okay. Anyways, net foreign inflows into U.S. assets, still getting a lot of foreign inflows again. But once that reverses course, you think emerging markets are going crazy right now? Just you think China was going crazy in 2025? Just wait. A lot of people were also worried about Alibaba's earnings date taking a long time to be confirmed. They finally confirmed it, and honestly, yeah, they had a whole thing going on with the Quen team. Um, seems to be a restructuring. However, I'm not worried about it. Well, according to Alibaba, in a letter or announcement, they, from my understanding, they confirmed that they're not looking to, they're looking to keep everything open source with Quen. So I don't think they're gonna be monetizing that. Um, but I think they have something planned, something they want to announce soon, and maybe on their earnings call. And I have trust in the leadership that they know what they're doing. They have a very big vision of their whole ecosystem that they want to expand and strengthen. I think whatever they announce in earnings for their forecast and guidance is going to be good, actually. And I might be wrong, but that's where, from everything that I've been taking in and analyzing, that's what I see. Hard versus soft data outperforming hard data. Home on the range is tightest SPX range to start the year in history, burning all those puts and not pumping everybody's lungs. Okay, 1 second, guys. China's Iran ties. Um, Sorry, guys. I actually made a note on this real quick, but there's not too worried about that. A lot of people were worried that China imports most of their oil from through the Strait of Hormuz and this and that, whatever. But over the past several years, Beijing has stockpiled oil at record rates, preparing it for such a crisis. The country has now stored up to 1.26 billion barrels of oil after going on a particularly big spending spree last year. That's enough oil to last 120 days at the current pace of consumption, according to Ristad from this article on Barron's. Okay, so after 90 days, so after 3 months, and everything's still the same, then I'll take a bigger look into it. But that's 3 months. That's in June, World Cup time. Look, I've had this thesis for the longest time. I don't think things go too bad anytime before the World Cup. World Cup is bringing billions of dollars into the United States of America. Donald Trump loves money. I don't think he'll mess that up. He knows it too. Um, that was more for like the domestic thesis, like everything that's going on domestically with the ice and everything. I thought it's not gonna get too bad until after the World Cup. Um, I guess you could also apply that globally for geopolitics as well, at least from America. Yes, the Iran thing is bad. I don't agree with it. Um, but I think things. I don't know. I don't know, but I'm not worried about this whole Strait of Hormuz thing, and it's nothing I can control. Okay, I can't like we can't control that. It could be closed for a week. It could be closed just for a few more days, for a month, for two, longer. We don't know, and we can't control it. What we can control is the companies we invest in, though. Okay, that's it. Whatever. We could analyze what the impacts would be after a certain amount of time, but we don't have to spend time trying to figure out how long it's gonna last and all that. Like whatever. Just let it play out. That's at least my stance on it. Um. Anyways, where were we? Whatever. Let's just go from here. Equity valuations across regions are now at historical highs. Emerging markets are the lowest ones, though. Distribution of returns of world tech versus world. Okay, so current very low. Global sectors, 12-month forward PEs relative to the last 20 years. Financials, lowest. Value, second to lowest. Okay, what's industrial scroll? Okay. Investors are paying less for upside options relative. So, by the way, all these black charts are from the market year. Investors are paying less for upside options relative to downside protection. That's not extreme, but it's clear cooling and bullish positioning. Investors are dialing back upside bets in European equities. So this is for Europe. Emerging market volatility extended. Okay, the chart shows emerging market versus the inverse of the dollar. Okay, you see a close correlation to each other. U.S. stocks versus government bonds, China stocks versus Chinese government bonds. Okay, broad-based emerging market equity ETF cumulative flows, record-breaking flows to start off the year. Emerging markets still look cheap relative to developed markets on most measures. Okay, Strait of Hormuz outbound transits is pretty much closed. U.S. listed ETFs have pulled in over 350 billion since the start of 2026, an 80% increase versus the first 2 months of 2025. So basically, I think it's a stock pickers market. We have record-breaking inflow to start off the year for ETFs. What have they been doing? They've been underperforming. So stock pickers market. Um, so pick good companies. Okay. Now, what do we have here? Theoretical capability and observed usage by occupational category. Um, so they think AI would cover more office admin, sales, legal, education, arts, media, um, computer and math, business and finance, the most, right? That's like the range to give it at right now. But the blue range is the theoretical coverage that AI can cover for all of these categories, which has a lot more room. Anyways, Mag 7 was equal weight. Okay. Retail cash. Okay, retail's appetite to buy the dip has remained a dominant force in early 2026 flows. Year to date, average net national traded on our platform has been 2.5 larger on S. Okay, down days. Moderated in February, but dip buying actually increased. Okay, so people are still buying the dip. They'll hedge to the downside, but they're very very quick to buy the dip. Okay, biggest jump in gasoline prices today change since I don't know when, if not the biggest. Bank of America internal data continues to suggest an ongoing job growth rebound, but then we got that data a few days ago, and it was like a 90,000 decrease rather than the 55,000 increase that they were expecting in job gains or something like that. Job postings for software engineers are rapidly rising, so this could be showing that AI is not taking software jobs, or I don't know, but we'll see. We'll see. June 1965 S&P 500 top 10 cohort subsequent weights. So the top 10 AT&T, General Motors, ExxonMobil, IBM. Okay, and then you see how their weights in the S&P 500 go down over time up until now. Now that's the weight that they make of now, and the top 10 now versus before, and that's crazy, right? But that's life, man. In with the new, out with the old, out with the old, in with the new. Yeah, second way. China's energy import dependence. Take a look at that. Okay. The analyzed period shows that March has historically acted as a pause month for the S&P 500, with flat to soft returns over the past 15 years. Okay, so March, not really a good month for the S&P 500. Okay. Okay, so quarter one positioning adjustments as portfolio managers adjust the balance of their bond and equity allocations. Earnings blackout periods ahead of April reporting, policy uncertainty around Fed meetings, pre-tax season liquidity effects. Ahead of tax deadline, investors and corporations often raise cash to meet payments. So those are like the reasons why March typically are not the best months. It's not the best month, sorry. So early gains often fade towards the end of the month. And then post tax season liquidity normalizes, and but yeah, tax deadlines can suppress flows. Let's see. Oh yeah, Generac. So OpenAI's flagship Stargate data center project in Texas is planning to use 28 emergency backup generators powered by Baudon. I don't know how to pronounce that. Your French engine brand with a very sparse distribution network in the United States. That's dominated by Generac. This puts Generac in a strong position to supply the AI industry rapidly growing infrastructure, especially as new Texas regulations now require large data centers to have on-site backup power and competitor lead times stretch beyond 2 years. Generac has already launched a new data center product line with Baudon, Baudon, Baudouin. I don't think that's right though. Built a 400 million backlog and is expanding its manufacturing capacity to meet this demand. Yeah, just Generac benefiting from this partnership with OpenAI and this company for data center generators. And yeah, China listed Hong Kong ETF still seeing strong inflows. Nice. Hedge funds have been aggressively buying healthcare stocks. Now most overweight. Okay. Equal weight stocks saw a record 5.9 billion inflow in February. Meanwhile, Max saw record outflow. Delta put positioning. Investors currently hold the largest amount of S&P 500 put protection as they have ever, according to MS Morgan Stanley QDS, whatever that stands for. Again, back to the beginning of the video. They're all protected, man. So just burning them. Okay, we're just burning them. Healthcare relative PE forward. Okay. I'm gonna stop here, guys. I'm gonna stop here. China reflation factor versus Dixie index. China and the U.S. dollar, a relationship beyond commodity and emerging market. Forex. Okay, so China sentiment, and this is the dollar inverted. So as the dollar weakens, Chinese sentiment goes up, vice versa. So hopefully the dollar continues to weaken, man. Please, I hope. Anyways, okay, I'm gonna stop it here, guys. I'm gonna stop it here. There's so much data. I would be here all day, going over the whole month's data, and graphs and charts, and whatever I find. Alibaba is one of UBS preferred China plays. They write AI remains a strategic priority with CNY 380 billion earmarked for infrastructure over 3 years. We reiterate our preference for Alibaba, expecting margin recovery and increased AI monetization as key catalysts. Alibaba's cloud revenue growth now ranked number 2 amongst US hyperscalers. Look at that. Alibaba cloud revenue growth now ranked number 2. Okay, above Google's and above AWS. Alibaba cloud revenue growth versus US hyperscalers in percentage. Fastest growth. Way above Amazon's, Microsoft's, and Google's. Growth rate. Let's see if I add in. Oh yeah, women make more money, women spend more on makeup. Okay, that's pretty much it. Canada Goose, bands, anything, paper. One more thing I want to add on PayPal. PayPal is a slept on World Cup play. For months, I have been thinking about World Cup is coming up. This is a huge opportunity. There has to be a World Cup play that I could take to profit on, right? I was thinking like maybe retail. We get international people, people internationally come and that made no sense. People come from overseas and maybe spend a little bit. Maybe they buy themselves some Vans shoes or whatever the hell it may be, right? So I like Vans because Vans has a big global presence. It's recognized worldwide, right? Mm, but then I was thinking like maybe more direct, maybe something like Airbnb, TripAdvisor, Experian, right? TripAdvisor has the stock price has plunged, and I was really looking into it. I kind of like the the financials, but then PayPal World, okay, um, PayPal World. Did I? Okay, here you go. So the way to think about it is we've enabled each of the different platforms to be able to maintain their own economics. So if it's a PayPal merchant, we maintain our economics. If it's a UPI merchant, UPI maintains their economics. So everyone gets a win-win. Win-win-win. The consumers get access to additional merchants and consumers. The merchants get access to additional consumers to be able to make purchases, and the platforms get additional addressable market. So that's a win. And then we maintain some processing fees as a platform holder as well. So again, it's early days. This will take time to ramp like anything, but it's one of those things. That was from PayPal at a conference back in September. So if you think about all the global experiences that not only exist today, but that are coming even in the next 12 to 18 months with the Olympics, with the World Cup, with the travel that's really opening up, we think this is a great opportunity for us to put a stake in the ground, bring the largest wallets in the world together, and declare we want to be the platform that is creating interoperable wallets around the world. Okay? This came from PayPal themselves. Okay? And I think this went over everyone's heads. We have the World Cup. Dude, the World Cup is like the biggest sporting event ever. If not like just the biggest event every and it's every 4 years, right? And they're coming here. They're coming to the US, to the Americas. Here's one thing though. We haven't gotten an update on PayPal World from PayPal. We haven't gotten an update. I emailed investor relations, no answer. My friend Victor, he emailed them too. I don't think he got an answer. I think he would have told me. PayPal, come on guys, get it together, bro. This is their, it's their own words, bro. You see how bullish you see how optimistic they sound about this, and we haven't heard an update on it. From my understanding, the last thing we know is that they've started pilots. I think they've already started testing it in China, maybe. Certain companies, Mercado Libre was one, but then they dropped out, I think. But I think Alipay might be. I don't know. But look, they're already like testing it out. But I want a fucking update. I want an update because this is a huge opportunity for PayPal to capitalize on. A huge opportunity. And look, the market is typically around 90 days forward looking. So we're almost there. We're pretty how many Oh my god. How many days to the World Cup? 96 to 98 days away. Okay? It's almost that time for the market to start pricing this in. You know what? I said, you know what? I don't really want to risk short-term options right now on PayPal. But now that I'm thinking about it, if the market starts pricing this in, it's going to start pricing it in around now. And if PayPal actually gives an update on PayPal World, maybe the CEO actually gives communication, um, this could be very, very big. Okay. And I'm baffled. I'm baffled that it's being slept on right now. But it's just so crazy to me. Like, I've been thinking, how can I play this World Cup in the stock market? How can I capitalize on it? How? I'm looking for other places, but the whole time, what might actually be the best way to play it? I've already been invested in the company. I've already, like, what I've been looking for was already in front of my nose. You know, I already had what I've been looking for. I just didn't realize it. I feel confident. We just need that communication from PayPal. And yeah, I'll just end it here, guys. Probably nobody watches this. I really don't care because I I go through the information, right? I've already read it once, and this is me reading it again, and it just adds confidence to my work. It adds confidence to my plays, okay? Cause like damn, like all this stuff makes sense. Everything you were like, I really like it. Really gets ingrained into the brain, you know. And it's just it's just really good. But and if somebody does watch this, thank you for watching. I hope something helped you in some way, shape, or form. And again, educational and informational purposes only, not financial advice. I am not a financial professional or advisor. Um, but yeah, thank you for watching.